Welcome to stockmarketfunding.com. We had at one time First Solar FSLR. This here happens to be a 130 call that was up here at $22.50. And what I want people to know is that we're getting in down here at $5.90. Some got some $6 ones here. But we waited 1, 2, 3, 4, and on the fifth day after it started to decline. And remember, when it comes to options trading, this was inflated off of that great earnings report. We used to own the 145 call, made a lot of money, sold them. The rest of the public, though, guess what? They're riding them all the way down, and they're right back here where the earnings were when they had that big pop to $22, and we're buying them down here. And basically, here's the First Solar hit 130.12, hit that 130 strike, and we're getting in, and we like what we're doing, and we're going to continue to hold it. And there's another bid. We made the market. Today's high was 890. Our entries are down here, but that's for today's entry. The thing about it is when you're buying in the deflated area, you're always going to get a bounce, whether it's today or tomorrow. It doesn't matter. You will get a bounce. You came down all the way to the deflated entry that we did, 22.50, and the traders that are buying the contract saved a lot of money. They took out all that risk from there to here. And I'm telling you, that's the gift of having risk management. And there's a gift at the next entry. And we're buying down here. And we can go a little bit lower intraday, but we will pop. And that 130 call will pay money for this options expiration, because the equity itself, as I show you here on First Solar FSLR, the First Solar high was, we traded it on the earnings. Go look at stockmarketfunding.com, look at those tapes. And one thing I got to say here is that this 200-day simple moving average is where the stock is struggling between the buyer and the seller and the stop market orders. The stock went straight up here to 152. It's come $22 down. And that's the good thing about selling that side of the call and buying puts back below the market for these kinds of reasons. They can happen in market volatility. And the thing about it is that we're struggling at the 200-day moving average. And here's First Solar. And once again, here are the call options that we bought. We just showed you on the tape where they were and how we bought wholesale. Because of our risk management skills and our expertise, when the contracts were at $22.50 and we're buying down here at $6, well, if you take 22 and minus $6, that is the risk that we took out at the $130 strike price. And we're feeling good about it because, once again, our risk management entry always gives us a way out because of our wholesale entry. First Solar. Say I love stockmarketfunding.com, and I love to buy wholesale, so that way I can sell back at a retail price to the public. And this is why we like doing what we do. And I have showed the call chart. I've sold the stock chart. This was the great earnings report, which was a wonderful report. We were long. We made a lot of money on this gap, and now we're buying back down here. And the 200-day, and the calls are moving up for Ray, which has got Ray very excited about having that intraday for a profit. And that's what I've got to say about First Solar.